year 2021 has turned out to be. Already, 37 unicorns have been minted. It is also going to go down in history for being the year of exits. We're done with the first wave of IPOs. Zomato, Nykaa, Policy Bazaar, and even Paytm. What are the lessons now for the second wave, which will have a delivery, it'll have a Farm Easy, an Ola, and an Oyo. I'm discussing that and more with Sequoia Capital's Rajan Anandan. Rajan, always a pleasure talking to you. The year that's gone by, the number of unicorns minted, the kind of liquidity that we've seen, valuations that just don't seem to make sense anymore, and then you've got the IPOs. What did you think of the year?
Yeah, Nayantara, thank you for having me. Always great to see you. Look, it's been an extraordinary year, as you've just mentioned, right? We've had, by the way, we ended last year with just a little over 35 unicorns. So in 2021, despite being still very much in the middle of COVID, despite having arguably one of the most difficult times in India's modern history, right towards the middle of this year, we've seen 35 new unicorns emerge out of India. And as you said, that's really not even half the story, because we've had a large number of exits, and I think that's also not even part of the story, right? I think the most interesting part of the story are the new companies that are starting up, Nayantara, and the kind of amazing and incredible things that they're working on that are at the core of Indian user base and at the core of the Indian economy. So it's been a very, very special year, Nayantara. But as you say, we still have 6 weeks to go. So the year's not done yet.
A lot can happen in 6 weeks. You've now seen a unicorn being minted in 6 months flat, right? But Rajan, jokes aside, people are also struggling to figure out how they're supposed to look at these new age companies that are going to the Lal Street. You've got companies now that have a valuation of more than 1 lakh crore rupees, have never delivered a profit, or have, minuscule profit. How should one look at these companies that are going public? Right now, you're in the middle of an absolute frenzy.
Yeah, I think, look, firstly, Nayantara, I'm not a public markets investor. I don't invest in public equities. I'm a private, I'm a venture capital investor, right? So, that question is probably more appropriately asked to public market investors. But I'll tell you simplistically how I think about, sort of these companies, right? I think the question that should be asked is, if you look 5 and 10 years out, can this company be a truly market-leading company? Actually, interestingly, every company that has gone public so today are market leaders, but not just market-leading, but have very significant revenue with very, very strong underlying profitability, right? Because eventually companies do need to generate profits. You look at companies like Google or Facebook or Amazon or Apple, for that matter, right? I mean, several of those companies all of those companies that I mentioned, maybe except Facebook, have over $100 billion of cash in the bank, right? Now, these companies were not founded 5 years ago or 7 years ago, right? Companies that we're talking about are founded between 7 and 12 years ago, right? Many of them, right? Policy Bazaar, Nykaa, so on and so forth. So what you have to sort of ask yourself is, if you fast forward to, let's say, 2030, which is 9 years from now, the end of the decade, right? Do you see the potential for this company to, number one, continue to be the market leader? What you can project, what you can absolutely assume that the addressable markets are going to be orders of magnitude bigger. So will they continue to be number one? That's an assessment on the management team, the quality of the management team, the quality of the execution. Second, do you see a very, very large revenue base, a real revenue base, right? Not GMV, none of those things, not TPV, but very large revenue base. And then thirdly, look, do you see the company being very profitable, right? So because every enduring company eventually has to become very, very profitable, right? And you can look at the most valuable technology companies in the world, and they're all insanely profitable, right? So the same thing is going to happen in India, Nayantara, and I think that is the question that if I was a public market investor, which I'm not, and I don't intend to be, is you should be asking, because that is then what determines whether the company is going to not just be worth what it's trading at today, but really whether it's going to appreciate to the levels that you would expect it to appreciate if you're a public market investor.
Rajan, you may not be a public markets investor, but as a venture capital investor, you'll have to keep a watch out for what's happening, at least in the IPO market. And if it starts to appear frothy, won't venture capitalists be in trouble? Won't startups be in trouble? And that's the kind of chatter we started hearing.
Yeah, look, firstly, I think, look, I personally invest at the very, very early stages, right? It's two founders starting up. They barely have a product, and we invest a few $1 million in the company. And it takes about 10 years before they can actually get to a place where they have between 8 to 10 years before they have an enduring company that you can take public. You can take a company like Freshworks, right? Freshworks was started 11 years ago, and they just went public on NASDAQ this year. So I think, look, it is important to keep in mind, Nayantara, that we are in a global environment with liquidity that the world has never seen before, right? It's not just in India, by the way, right? You're seeing this globally in equity markets. You're seeing this in private markets. You're seeing it in public markets. You're seeing it in pretty much every asset class. It's especially sort of prevalent and it's visible in the tech markets, both in privates and publics. But a significant part of this is also driven by global liquidity, right? There's massive amount of liquidity, globally in every country, including in India. And second thing to keep in mind is, everything moves in cycles, right? So we are at we are at a peak of a cycle that we've never seen before. So if you believe in cycles, which we do, the cycle at some point will correct, and when it corrects, obviously it corrects pretty meaningfully when it does correct, right? So these things do go in cycles. I think as venture capital investors, Nayantara, what we strongly believe in, right? Number one, you've got to invest behind founders who want to really build extraordinary companies, right? Who have a very, very long-term perspective, right? We're not investing for 1 or 2 or 3 years, Nayantara, right? When we invest in a company, let's say we invested in a company this week, right? The question we're asking is, is this a founder or co-founding team that can build a company that is going to be extraordinary a decade from now, not whether it's going to be amazing a year or two from now, right? So one, we're betting on founders. Secondly, we are betting on markets that are going to be very, very large, right? So let's take the e-commerce market, right? The Indian e-commerce market is $40 billion of GMV today, right? It's going to be easily $200 billion of GMV in the next 5, 6, 7 years. And by the end of the decade, will be 3, 4, 500 billion of GMV. So you're looking at a 10x growth in a market in a decade, right? So obviously, 10 years from now, the kind of company that you could have is going to be much, much larger, right? So we're trying to understand sort of where is the market going in a very, very long-term basis, right? And third, we're trying to understand, look, is there is there enough white space, or are there sort of unmet user needs that can be met that you can build? So those are the set of questions that we ask Nayantara. We don't really get fazed by because we know that cycles happen, right? So when you have a cycle like this, there is going to be at some point the cycle will turn, and that will happen, and it always happens. History sort of repeats itself. But I think successful early stage investors, will continuously focus on the what we call the fundamentals, right? Back amazing founders who are going after large markets, who have very unique insights, and invest in them with a perspective that this is going to take 8, 10, 15 years to actually build an amazing company.
But do you think the market is getting spoiled because of this gush of liquidity, and we just don't know how bad the crash is going to be? And while Sequoia might be, taking reasonable chances, not all VCs are doing that, right? So you'll have a small round, there'll be a larger round, there'll be a third larger round, and it is getting quite crazy. A lot of the valuations have stopped making that much sense, and there is private chatter on this.
No, so look, at the end of the day, investors, especially venture capital investors, Nayantara, obviously, you can't be a venture capital investor managing hundreds of millions of dollars of capital, let alone billions of dollars of capital, if you're not very, very good at what you do, right? I think everybody is making, assumptions, right? And around what a company is worth, right? So if a growth stage investor is going to come into a company at, let's say, 500 million valuation, or they're going to come into a company at $1 billion or $2 billion valuation, the assumption that they're making is this company, a few years down the road is going to be worth, multiple of that, right? So that's an assumption that we're making. And as they say, right, the music continues to play until the music stops.
And the music hasn't stopped, right? Like, even if you had one IPO which didn't go the way it was meant to be and the way the founder, Vijay Shekhar Sharma, dreamt, etc., the music hasn't stopped. You've anyway seen the stock recover? Show some recovery.
We had, Go Colors, was oversubscribed 130 times 2 days ago. it's a consumer product startup, So, we talk about D2C brands, right? That's another big wave that are coming, right? So look, I mean, I think, we haven't seen any slowdown at any stage of investments, Nayantara, yet, right? We continue to be as active as we've ever been, as we look at the broader market, we haven't seen any slowdown at all.
Then do you think that with all that we've seen this excitement in the Lal Street, the government should even be looking at overseas listing?
You're picking on my favorite topic, Nayantara. Absolutely, right? Look, at the end of the day, I mean, you and I have chatted about this so many times. By the way, I'm really hoping that the government will follow through and make this happen, because it's been 2 years now, right? It was almost 2 years ago that our honorable finance minister talked about international direct listings for the first time. Look, it's absolutely critical, right? Look, as India, we should let our entrepreneurs decide where they want to list, right? Do they want to list on the Indian exchanges, or do they want to list directly on an international exchange? What we know for sure is a large number of them, Nayantara, and we had said this, remember a year and a half or 2 years ago, I had said this, which is a large number of our entrepreneurs will absolutely list in India, right? Because they're building Indian consumer brands that are very well known in India. Take a Zomato, take a Policy Bazaar, right? And this is the domestic market, and it makes sense for them. They're building a consumer brand, right? Indigo, which was, we're very fortunate to be investors in the company. They went public. They were the first IPO at the beginning of the year in January, right? It's a paints company. It's very well known. India is the market. Go Colors, which is another consumer brand that's going public, right? So a large number of companies will go public in India, and we think very large number of companies. However, there are going to be a specific category of companies, right, that are trying to build global businesses where the primary market is going to be, let's say, the US, or maybe it's Europe, right? And in some cases may also have business models that Indian markets still are not able to appreciate and understand, right? So if you look at a company like Freshworks, right, which is a global SaaS company, right? It's a company from India originally, but really is a global company. A significant part of their revenues actually comes from the US. It's very, very important that they build a very strong brand in the US, right? Because this is a company that's going to go to the moon from where it is today. And it makes sense for that company to actually list on NASDAQ, right? So I think it's absolutely critical that we let Indian companies list directly on international exchanges, because at a very simplistic level, we give the entrepreneurs the option. And I can tell you, for decades to come, a vast majority of entrepreneurs will decide to list in India because it's the right thing to do for their businesses, right? But a few of them will decide to list on international exchanges because of the nature of their businesses, right? So, long answer to your question, but continue to believe that it is the single most important thing that we need for our startup ecosystem to unlock value, right? Because what we've shown, Nayantara, this year, right, is that we can have a 1 lakh crore company, but 1 lakh crores is $15 billion of market cap. We now globally have 3 companies that are over $2 trillion of market cap, right? Our goal no longer is to get to a unicorn or a decacorn, which is 10 billion, right? We should very quickly get to 100 billion. India has 3 companies over $100 billion of market cap. One of them is a technology company, which is TCS, right? Technology services. But the real question is, look, how do we build trillion-dollar companies, right? I mean, in the next 10 or 15 or 20 years, Nayantara, India needs to have several, if not many, trillion-dollar companies, and we should do everything that we can as a nation to enable that, right? And this is one of the actually very straightforward regulatory reforms, right, to give entrepreneurs a chance and the option to list directly internationally.
They have been promising. Let's see if it's going to make it into budget 2022. I promise this will be my final question. Rajan, are you a believer of Web3, and are you looking at it at all? I'm of course talking at a time when we know a crypto bill is going to be tabled in Parliament. I don't want to debate with you on what the contents could be, because neither you or I know about it. It's just going to be speculation. But we'd just love to get your views on Web3.
Yeah, no, Nayantara, look, we are as a firm very big believers in Web3, right? In fact, this year we've been very, very active as Web3 investors. I'd love for you to have Shailesh Lakhani, who's our partner, who's leading our foray into Web3, right? Look, we do think this is going to be, it's radically going to reimagine many aspects of what we know. But if you look at Web3 today, we're seeing a lot of very exciting, by the way, a lot of folks confuse Web3 with cryptocurrency, right? I mean, this is not about cryptocurrency. It's really about a fundamental new set of building blocks on how the next generation of what we call the internet today is going to get re-architected and is being rebuilt at scale, right? But if you look at Web3 today, look, there are three big sub-segments that are interesting, right? There's gaming. Today we talked about the gaming report. We briefly mentioned it, but for folks who are interested, we can get into a lot more detail on that. There's NFTs, which we think are super interesting, and in fact, it's going to finally give creators the ability to monetize in perpetuity, right? And which is fascinating if you're a creator today. So that's number two. The third is really a DeFi, right? Distributed finance. We think the kind of innovation that we're going to see in finance over the next 5, 10, 15, 20 years is going to be extraordinary. That's going to be enabled by Web3. And then finally, sort of what we call Web3 infrastructure, right? The underlying infrastructure set of tools and software that you need to make the entire sort of Web3 work, right? So those are four very important spaces that we're seeing today. And we do believe in many ways, Nayantara, as India, we have built an extraordinary India-centric Web 2, right? It's the Indian internet. It's basically an India-centric Web 2. I think what Web 3 provides us as a nation is to win the next internet globally, because Web 3 is global by definition, right? There's no such thing. Web 3 doesn't really know borders, right? I mean, Web 3 is sort of global by definition. And I think we have this extraordinary opportunity, Nayantara, to shape it, to win it. Because in many ways, if you go back to 1995 or 1991 and said India wants to be world leading on the internet, you would have done a lot of things differently, right? And today we have that opportunity in Web3. So we are very optimistic. We think this is going to happen. It's going to happen at scale. And I must tell you, Nayantara, one thing that I don't know whether you know this or not, but Singapore and Dubai have emerged as the hubs for Web3. So entrepreneurs from around the world, right, from India, from Australia, from Indonesia, from China, from Japan, from Korea, they're moving to Singapore. You know why? Because they have an enabling regulatory and legal framework for Web3. Same thing is now happening in Dubai. I was in Dubai about 3 or 4 weeks ago, right? Many entrepreneurs from around the world, Web3 entrepreneurs, Nayantara, are moving to Dubai. So I think it's very important as a nation that we get this one right. Now, absolutely, we should protect this. We should protect the nation. We should protect our consumers, right? But at the same time, we need to make sure that we are innovating for the future. And Web3 is going to be gigantic.
Oh, Web3, so much innovation happening, in the smaller towns also. We're seeing, you're absolutely right. All of them moving to Singapore and Dubai. Let's hope they stay here. Let's hope India leads the Web3 revolution. And, on that fabulous note and optimistic note, Rajan, I know I've taken more than my time. So thank you very much for joining us today here on ET Now. It's always a pleasure talking to you.
Great to see you, Nayantara.